Thanks for joining us on yet again another edition of Crypto Talks by Kalkine TV. I'm your host Sage, and while the investment community is drawn towards digital assets, we have sourced some of the brightest investors in the field to share their insights and observations. And having experience in leading a digital investment and fintech firm leveraging blockchain technology for asset digitization and management, we're lucky to share some space with Ms. Gemma Zhu today, an avid private investor at Fork Ventures. So welcome to the show, Gemma.
Nice to be here. Thank you, Sage.
Thank you so much for making time for the show. Kalkine Media is excited to have you with us, and we're keen to hear your insights. So let's get started. You're an avid investor with experience running a blockchain-based company. What was your motivation, please, behind being immersed in this field?
Well, my background is in financial services, and it was almost by accident in early 2017 that on a trip back to Australia. At the time, I was living overseas. I was introduced to a new technology at the time called Ethereum, and this was early 2017. And then I've been hooked ever since. And that's largely due to, as a non-technical person, what really got me hooked and continue to really spend all my time in this space is the incentive models, the various type of economic models that I'm seeing in this space.
And I can totally feel your passion for these type of models that are developing through smart contracts and other technicalities that this provides. Could you please give us some background on the asset digitization industry? From your experience, your insider opinions will be so valuable, because as these marketplaces are expanding around us, like the NFT markets of OpenSea and Rarible, they're leaving some people behind. So it'd be great to gain some insight from you today. So these marketplaces have gained the spotlight. Do you know how value is placed on these non-fungible tokens, and why is this space pulsing now, please?
So NFTs, non-fungible tokens, really were first, came to the spotlight in probably late 2017, early 2018 by CryptoKitties, which was probably the first, NFT digital collectibles that really sort of started the hype. Now, everything during the bear market in 2018, 2019, everything sort of went down, and people left. Essentially, a lot of people left crypto markets, as well as NFTs died down. Now, I think the recent craze or the recent hype in NFTs is largely due to what preceded it was the DeFi summer in 2020. So finance became completely disrupted. Not completely, but many of the traditional financial services could be replicated in a decentralized world. So that's the economy, right? And then so often what happens after that is people start to look at what else can they invest in beyond finance, and culture is the sort of the next obvious thing, and that is what essentially characterizes NFTs and digital collectibles. Now, so how is that valued? Well, I think that is really up to the buyer and the seller, right? Often the value is in the eye of the beholder. And that, is unlike traditional finance, where you can do cash flow analysis, where you can do lots of numbers and fundamental analysis. NFTs and digital collectibles is really, buying and selling art, or buying and selling a form of a collection that is quite subjective in value. It could be worth $1, it could be worth $1 million. So there is no real fundamental valuation method that can be applied to NFTs.
Okay, thank you for shedding a bit of light on that scenario for us. So I think in the past, in the 20th century, for example, non-fungible tokens would have been things like rare coins or stamps, other collector's items like that. Would that be correct to say?
Yes. So often you find in the current, environment, there are different types of NFTs that's taken off. So there are, they call it digital rocks, or pictures of, NBA top shots, right? So these are NBA stars. So often these NFTs take off partially because of the perceived scarcity of these NFTs. Often they're what we call a one of one or one of two, right? So there's only ever two versions that's the same. So there is this form of scarcity, But is that scarcity enough to drive value? To sort of in the hundreds of thousands of dollars to millions. I don't know.
Right. And I suppose a blockchain would help to maintain the ownership and the origination and the genuineness of the digital NFTs. Would that be correct to say? Yeah.
Of course, and that is also partly why NFTs has been quite easy to adopt for many, crypto native investors, traders, those who've been in the industry for a while, as well as creators, those who actually create the artwork. In the traditional world, it's very hard for a regular person to try and verify whether this piece of artwork is really by the painter or the artist, how many copies have been made. Whereas on the blockchain, it's fairly straightforward, right? It's the creator essentially put their stamp on the blockchain, puts their data on the blockchain, and that tracking, that data is always there. So every transaction that follows from that can be verified on the blockchain.
Right. Thanks for clarifying that for us. Now, with famous names like Twitter's Jack Dorsey selling his first tweet as an NFT, and even Tim Berners-Lee's source code for the internet selling as an NFT this year, some of the NFTs in the marketplace are claiming astronomical prices. And you touched on this a little bit about the value of NFTs. How can lay people and retail investors get involved, or are they exclusively just for the wealthy?
There are very many open platforms like OpenSea, Rarible, various different types of NFT marketplace, and OpenSea is probably the most popular one. That has NFTs ranging from a very small amount of say 0.01 ETH to 1,000 ETH Ethereum, right? So it's anything from say $20 to millions of dollars. So really, it is available for the regular retail investor to the high net worth to invest in, and the transaction time and the process of closing a transaction, completing a transaction is fairly straightforward. So it's definitely not just for the wealthy, but the ones that do make the news are those that is selling at a very high price.
Right. Thank you for shedding some light on that very elusive space. Now, cryptocurrency, blockchain and central bank digital currency seem to be sharing some technical aspects in operation and development. What are the major trends that you have noticed over the last 3 to 4 years, and how have they impacted cryptocurrency and the evolution of blockchain?
When I entered the space in early 2017, everything was very primitive. Bitcoin at the time had been around for 7 years. At the time, the narrative was around these infrastructure, layer one protocols. Bitcoin, Ethereum, other competitive or other competitor infrastructure plays, and over time, as the industry has matured and as the infrastructure itself has matured, then we start to move up, higher up in the stack, in the tech stack. That moving more into, I guess, in the last sort of 24 months, moving more into the decentralized finance applications. The digital collectible side, there are other, even content creation side. So that's more sort of, and the application layer. And that is a sign of the market maturing, in the last 3 to 4 years.
Right, okay. Thank you so much for sharing that insight. And it's interesting how with the Ethereum smart contracts, people can loan out, and there's a lending facility through that modality, which would be interesting to see how that develops further and creates more money and liquidity in the economy. So we'll have to wind up the discussion now, Gemma. It'd be great to talk to you for longer. I can see you've got a lot of insight and observations to share with us. But while the world seems to be heading towards a completely tokenized world, can you point to any regulatory risks as this technology proliferates, and how can stablecoins have the ability to disrupt the financial markets as we know them too, please?
Well, stablecoins is a very important medium of transaction that's popularly used in the crypto markets. In fact, often when people first enter the market, they convert fiat dollars into the equivalent of stablecoins and then transact with that in the ecosystem. Now, stablecoins at the moment, I think, is probably the total supply or market capitalization is around $100 billion. So it's getting to a stage where, of course, the regulators are getting concerned, looking at it. Now, I think, some of the large stablecoins out there like USDT and USDC, they regularly now share audits of whether they are indeed backed by the equivalent cash and cash equivalents in the fiat world. So I think through these sort of regular audits and more transparency in sharing what is in fact backing these stable coins, that will provide markets and the regulators with more confidence that this important, I guess, mechanism, important pillar in the crypto space, is not providing any systemic risk.
Yes, and interesting to note with stablecoins as well that out of the many that have failed, they seem to be the ones that are backed by gold that seems to not be able to sustain. So interesting to investigate into that further, I suppose, if we have time. But Gemma, just finally, can we talk about the security aspects of dealing in digital assets? When it comes to technology, especially in finance space, cyber attacks are a big concern. And although some say that Bitcoin or the blockchain can't be hacked itself, what do you feel can be offered as a feasible solution to ensure due diligence on digital securities to make it a safer option for investors to look at?
Sure. Now, from a cybersecurity hacking perspective, often to be really secure is definitely to keep your crypto assets in your own wallet. So by that you mean keeping in your digital wallet where as an investor or as a holder you have access. You are the only person with access to the private keys because they are sort of the in a way, quote unquote, the passwords to your digital wallet. And if you lose that, then it's very hard it's almost impossible to recover these assets. In terms of, and that is much actually from a security perspective, it's safer to keep it there than to put on an exchange because in the exchange, in theory, the exchange has the private keys, right? And if the exchange gets hacked, the crypto assets, your crypto assets, may be at risk. Now, in terms of digital securities, that has two, I guess, implications. One could be meaning the actual cybersecurity we discussed, or another meaning could be sort of the actually regulated assets on the blockchain. Now, that is where the regulators will come in and to provide the right amount of guidance for the investors when they choose to invest in digital securities.
Okay, thank you so much for sharing your insights and making time for the show again. That's all we have time for today. We'll have to start winding up there. Was there any final comments you'd like to share before we close up the discussion?
No, it's been great to come on here and share my thoughts on the industry and as an active investor and observer of the sector. I'm very optimistic about what the future can bring in the crypto space.
Yes, thanks again for making time for us, Ms. Gemma Zhu, an avid investor and who has had experience in leading companies in blockchain and digital assets. And you can, if you've just joined us, you can catch the full discussion via our YouTube channel, Kalkine Media. And please stay watching for more expert talks and live market commentaries. And as we say, stay apprised and invest wise.